Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Good morning, Dr. Hana. How are you today?
Alhamdulillah, good.
Alhamdulillah. Good. Okay. So Dr. Hana, today maybe our participant is only between 18 or 18 to 17, if I'm not mistaken. So it's only our international student class. Yeah.
Okay.
So it's just
How
focused
many?
on
About
international
20 student
class.
only?
Uh, what? Sorry?
For how many student today?
17 or 18, Fadila?
Oh, okay.
Most of our class, all of our class, 17.
17, ma'am.
Only one
Yeah,
class.
only one class because other class cannot join today because they
Oh,
also
okay.
have offline class today. So
All right.
Dr. Hannah, you can start your explanation. So class, today Dr. Hannah will explain to you about standard costing. Okay, please listen to Dr. Hannah carefully. Please note some questions. Yeah. Don't forget to ask some questions for Dr. Hannah about this topic. Okay, Dr. Anna, please.
Thank you, Dr. Vita. All right. Can you hear me clearly here?
Yes,
Yeah.
ma'am.
Okay. Assalamualaikum warahmatullahi wabarakatuh. A very good morning to everyone in my class today. So sometime lesser is better because all of the students can ask a question. All right. Okay. So let me check the. All right. Today we are going to start with a new chapters. All right. The second chapters between UNP and UITM. It is about the standard cost and balance scorecard. All right. I actually always advise my students to thoroughly solve any problem related to the particular topic before you enter into a new topic. Okay, because actually, um, if you settle the previous topic, all right, so it's going to help you to reduce the stress and anxiety, especially for students that may experience during tests or your final exam. You don't carry your worry until the end of the semesters, all right? And worries, you normally you have worry because you are not prepared. Okay, if you have prepared everything, then you have a strong foundation of knowledge, then you don't worry for any question that's going to come out. All right. And also it helps the student actually to avoid any problem cramming of studying at the last minute. Right. So this one is actually maybe can help you if you master every topic before you moving on to the next one. Okay, so hopefully you have settled your previous chapter with me, and you can ask me if we have any free time after this, or you may ask Miss Vita for you to answer the question. And hopefully you have tried the last few questions that we cannot do in the class, right? Okay, so now uh, let me explain on the learning objective today. So what are we going to do for the next maybe 2 or 3 hours later to describe the standard costing. This is the first learning objective today. What is actually standard cost? All right, we try to determine the direct material variances, determine the direct labor and total manufacturing variances, and prepare variances report and balance. Right. Okay, let us look at the first learning objective here to distinguish between standard and budget. All right, both standard and budget, it is actually a predetermined cost. All right. In management accounting, both standard and budget actually very important for you in planning and controlling the costs, right? So standards actually, standard, you have to remember these standards are actually predetermined unit costs that organization normally use to measure their performance and determine the efficiency of their operations. So normally you set the standard cost first, right? So and the budget refer to the total amount of money allocated for that particular period, usually fiscal year, to meet the organization financial objective. Right, both standard and budget actually contribute to management planning and control, and they differs in that standard provide benchmark for actually benchmark for measuring performance, while this budget actually provide you a roadmap to achieve your financial goals. So by using standard and budget, companies can monitor performance and make informed decision actually to improve the operation and to achieve this financial success. Right. So normally we'll look at the difference here is the standard is a unit amount and budget is a total amount. Right. So we look at the advantages of having standard costs, right? So of course, everything that we do, we need to look at the pro and cons, all right? So we look at the advantages of having standard costs here, where maybe we can see the first one is to facilitate the management planning. The standard costs actually very important for the management in, as I mentioned earlier, for finance and operation. All right. So management actually refer to the predetermined costs that are established as a benchmark for goods and services they produce or purchased by a company. They need to have a record for this. All right. And this cost will help business from that data that normally the company or our business will establish a budget. All right. And we will do a forecast and pricing strategies by providing what we call an expected baseline or as a benchmark for the expenses. All right. So standard costs can be used to evaluate performance of a business, identify areas where you can have cost saving. All right. So once you adopting the standard cost, business can be monitor their expenses and can make informed decision where you can improve the profitability and efficiency. All right. So that is actually facilitate the management planning. Why it is important in our management view. All right. Another advantage here, we can look at the image, promote greater economy by making employees more cost conscious. All right, we need an employee that have in mind to set a cost conscious attitude, all right, or culture, where if we encourage a culture of cost conscious in our organization, let's say you are the boss of the company or you are the managers in the organization, it is very important actually. All right, so you need to build up the culture of cost conscious among employees, where this is actually very significant to contribute to promote greater economic within an organization. All right, so you can have a better maybe low expenses if you are cost conscious. All right, and this can be achieved actually by making employees more aware of standard costs and how the action can impact the overall cost. Maybe you have set standard costs and now you have to plan that the actual cost later should be lower than your standard cost. You will look at why I see that, because it is very important. The standard cost, the actual cost should be lower than the standard cost. All right. So this will give positive impact to the organization. So by providing the employees with clear understanding of the cost, which associated, I think, with different aspect of the business. So this again can make informed decision that can take into account the impact of the company's bottom line. All right. So this can lead to more responsible and efficient use of resources, because you want to control, you don't want to waste the resources, and it helps you to get a better outcome. And for this positive impact actually will give you a positive what we call outcome. You know why? Because some organization will give back to some of the profit to the employees. So that's why in your mind you have to take care the cost of the company as well. Even you are not the owner of the business, but you are part of the business. The employee is very important in the organization. All right, another advantage of standard cost, it is very useful in setting the selling prices. All right, so one of the significant advantages of using standard cost in business is operation, where actually it can aid in determining these selling price of good or services produced. All right, so by establishing a standard cost, business can actually accurately estimate the cost of producing a product or service. Right? And this approach enables business to price their product competitively while still generating a profit. So standard costs actually serve as a basis, all right, to determine the minimum price that must be charged to cover the production cost and to generate a profit. All right, so that's why you need to set the standard price. All right. Another advantage is to contribute to management control by providing basis for evaluation of cost control. One of the most crucial aspect of business management is cost control. All right. So it is important to monitor the cost incurred by the business to ensure that it stay within the budget and remain profitable. If it is not enough, then you have to simply monitor the cost, evaluate their cost control effort, identify the areas that you need to improve. All right. So, and this where management control become very important. Right. So by comparing the actual cost incurred to the standard cost, business can identify area where the costs are higher than expected. All right. Standard is something that we mentioned earlier is predetermined. The actual cost is actually the actual price that we pay for whatever material or labor that incurs in our production. All right. So this is actually where you will compare between actual and the standard cost. All right. Then you can identify the area that need for improvement. All right. So the management will do something. All right. Another advantage here is useful in highlighting variances in management by exception. All right, this actually standard cost is one of the valuable tools for business at it identifying variances. How you identify the variance, we will look through the important part of variances after this. All right, where these actual costs and standard costs exist. The difference between two, we call it variance, right? And the last one here is to simplify costing of inventories and reduce the critical costs, all right? And standard costs can be an effective tool for business to simplify the process of costing inventory. So by using predetermined values to assign cost to inventory item, business can avoid the need to track the actual cost of each individual item. So this actually will help you to identify significant saving in terms of time and money spent on the clerical works, right? Which are actually related to the inventory management. All right. I think that is a little bit on the advantages. All right. And this is about the setting the standard cost, where setting standard cost actually is a crucial process that require the input and collaboration of all persons who have responsible for cost and quantity. Meaning to say that anybody that related to the production or to setting up the price or to purchase the quantity, raw material, labor, and so on. So they are the person that need to work together to come up with the setting of standard costs, where this actually maybe includes the managers, the accountants, all right, the production managers, all right, just now is finance manager, maybe any other relevant stakeholders, all right, and the purpose of having the standard cost is to establish a benchmark, again, against actual costs. All right. Remember this. Why you need to set this? Because you want to use it as a benchmark against the actual price. All right. So standard costs actually are based on historical data. The previous price that you purchase for something, and then you use that historical data, you sit down together and you set the standard. It is you with your colleague choose at what level it is suitable for the company to set that standard cost. All right. So this not come from anybody, but you use maybe what can I see here is actually maybe you base on last year data. Maybe you base on the industry data. Industry mean you can get the information. Normally in Malaysia, we can get the industry average, where this is actually data that provided. Maybe you have to pay some amount of money to get the data online. All right. So this can be used for you to what we call use that industry average to be a benchmark for you to set your standard cost. All right, because industry benchmark is actually the similar company that use the what we call in the same industry like you. Sorry, okay, it is this company that in the same industry like you. So we can use that benchmark. We cannot use, let's say you are the producer of sugars. You cannot go and find hotel industry benchmark. That one cannot, all right? So you the same industry. So that is for you to set the standard. All right. However, you have to take note that the standard should change. All right. Whenever managers determine that the existing standard is not a good measure of performance. For example, you try to use the previous, maybe in 2020, the other day, all right, you use the standard cost for 2018, 2019. So maybe it is not suitable when you use in 2021 because of the economic situation. All right. So therefore, you have to look at whether, as a manager, you have to look whether the information is still reliable to be used now or not. All right. Okay. So that is very important. If you think that as a manager, if you think that it's not suitable, then you can simply look at the current situation. All right. So the latest information that you can obtain from the market or from your purchase itself. Let's say you want to set this what we call material. Look at the latest material that you purchase, how much is the price. All right, so that is the new one that you can use. So example, if it is not suitable as a manager, you must review and you need to adjust to the standard costing. This can ensure that it will be accurately reflect the current cost of production, right? Okay, that is a little bit on the standard costing. So we look at the what is actually ideal versus normal standard, right? So in terms of setting a performance standard, companies typically choose between two different levels. All right, we have ideal standard and also normal standard. Ideal standard is what? Ideal standard actually refer to the best possible level of performance, all right, that can be achieved under perfect operating conditions. So in other words, we can say that they actually represent the theoretical goals that is difficult, and it is, if not impossible, to be achieved in a reality. All right. So normal standard are more realistic and achievable. All right. Ideal is to, we can say that, let's say the production is under 80% operating activity. So that considered is normal. If you see that you want to have 100% optimal level of production, so that is considered the ideal standard. It can be, in theory, you can have it, but in real life, it is quite difficult. So normally we look at the normal standard, which are more realistic and achievable. Here, representing, I think, the efficient level of performance. All right, that can be expected under normal operating condition. All right. While normal standard may not represent absolute best that a company can achieve, but they are more practical and very useful benchmark for measuring performance and setting goals. So that's why you take normal standard as your main consideration here, but you need to know what is actually the meaning of ideal standard as well. Okay, so in order for you to avoid a confusion during your exam time. Okay, so the choice between ideal and normal standard, I think, will depends on a company specific circumstances, including industry, competition, and resources. So normally we will go for normal standard. All right. Okay. So I think someone can try to answer this question. Most company that use standards set them at which one you think? Optimal level, ideal level, normal level, practical level.
C, ma'am, normal level.
Normal level, good. Thank you. All right, so hopefully everyone clear. We have optimal level, that is ideal level, okay, and practical. Okay, the normal is the normal standard that we just mentioned about the production just now. All right. So now we look at the case study, right? The example, how you want to, what we call, calculate the standard material, calculate the actual price material, and so on. So we look at the calculation part. That part is just now, the previous one is the on the theory part. All right, so to establish the standard cost of producing a product, all right, it is necessary for you to establish standard for each manufacturing elements. Okay, so in order to determine the standard cost, just now it is important to establish specific standard for each cost element involved in the manufacturing process. So this cost element actually include direct material, direct labor, and also the manufacturing overhead. All right. For direct material, standard actually are set for the quantity and cost of the raw material that needed to produce a single unit of the product. All right. You need to look at the direct or the quantity and also the cost of raw material in order for you to produce one unit of the product, right? And for direct labors, standard established for the amount of time or hourly rate or hourly wage rate. This is actually we use wage for the factory workers, all right, production team. All right, so normally we pay them based on the hourly rate. So we have to calculate the hourly wage rate that required to produce for each of unit of your product. All right. So this is in terms of the labor. All right. Just now is material. Material, quantity, and cost of the raw material. Labor is the amount of time for you to produce and the rate for the hour. All right. And finally, for this manufacturing overhead standard are set for all other indirect production costs, such as utility, rent, and equipment maintenance, whatever indirect costs that cannot be hopefully the cost that related to the manufacturing overhead is where the cost that cannot be attributed directly to direct material or direct labor, right? Hopefully you're clear about this early in your previous, I think, management accounting paper, all right? Your costing paper, hopefully. All right. So by establishing this standard, company, I think, can better understand and manage their production costs, which can, I think, ultimately help them to achieve greater profitability. We need to be very analytical here, right? So the person that normally get involved with this would like to the one that like to go through a very detailed calculation, right? So you will start to count every single cent in order for you to try to be accurate as you can, right? So okay, that is the material. So now we focus on each of the item just now, direct material, labor, and the manufacturing overhead. All right, so we look at the direct material. The direct material price standard actually refer to the predetermined cost per unit of direct material that a company expect to pay for a particular product. Okay, standard cost mean we think that we are going to pay this much. All right. How we think this? Why you think like that? Just because of you think the previous figure is like that. All right. Nothing happened, nothing changed, no economic problem, no other thing, no other factors that influence the changes of the price. Okay. So you think that the direct material price should be the same with your price that you have set earlier, right? So this is actually you expect to pay this much, all right? And this standard cost is often based on historical data, as I mentioned earlier, okay, current market condition and other relevant factors that may affect the cost of obtaining the necessary raw material, all right? So you use this as a benchmark, which actual cost can be compared to measure efficiency and also effectiveness of a company's procurement processes. Okay, why you relate this to procurement? Because this is actually involved with your inventory. You have a lot of supplier in the market, so you have to identify the best supplier in the market in order for you to get better prices. So I think that is related to your procurement subject. All right, so the way how we are going to get as good as we can, we need. All right, in the government, I think Malaysia or Indonesia is the same. All right, so we have the procurement department to get what we call control of this, because we try to get the best price in the market to offer to us if government. All right, so in the manufacturing company or production company, it is the same thing. They try to get as good as they can just because they want to minimize the cost, and they purchase in bulk, right? Okay, so of course they will get better price compared to other companies. All right, so by comparing the direct material price standard with actual cost, company can identify any discrepancies and take corrective action. So we look here, the item here is the purchase price net of discount. For example, you have a few information about the discount and so on. So you consider first before you calculate the price, all right? So here, I just use example, purchase price after discount is 270, all right? You also have to consider the freight charges and receiving and handling charges. So actually the standard direct material price per pound here is $3. All right. So let's say we take this as an example for us, and we will keep these figures to calculate the next variance difference in actual and standard. All right. So let us look at the next direct material. Just now is the direct material price. Now direct material quantity. All right. So the direct material quantity standard is also a predetermined, well-defined measures. All right. And I think well-defined measures of any amount of raw material that should be utilized, all right, in the production of each unit of finished goods. Okay, so maybe sometimes it based on what we call various factors, based on desired quality. All right, so sometimes you would like to have a high quality product, and of course, you know that high quality will get involved with the high price. Okay, so that is a little bit on the premium product. All right. Okay, so or otherwise you will use a normal quality of the product. All right, raw material. So okay, so the quantity just now actually form integral part of your production, or your manufacturing or costing system, to expect a total cost of production and profit. So now we look at this what we call the item that actually involved in the direct material quantity. Maybe material, the cost is 3.5 unit, all right, or 3.5 pounds here, all right. Allowance for waste is 0.4 pounds. Allowance for spoilage is 0.1. So the standard direct material quantity per unit consider 4 pounds. All right. And the standard material cost here is 12. You know why? Because just now the standard direct material is $3, and the standard direct material per quantity, per unit, you use 4 pounds. All right, so standard direct material cost now for 1 unit is $12. All right, it's just 3 times 4. Right. So hopefully clear about that. And let us look at another question here. The direct material price standard should include an amount for all of the following except material price.
D, ma'am. Normal spoilage cost.
Spoilage cost. Right, thank you. All right, so we continue with just now is about the material, the price, and the quantity. All right. So now we change to another direct factors, which is direct labor. Okay, direct labor cost. So we look at the direct labor price standard. Okay, it is actually the predetermined benchmark that specify the hourly cost of labor associated with the production of a particular goods or service. All right. So maybe it take into consideration a few factors such as the wages, taxes, labor expenses, represent expected costs that company should incur for each hour of direct labor. Right. So here is the example of the item that should take into consideration if you want to calculate the direct labor price. All right, the hourly rate is 12.50. Okay, and the COLA is allowance actually to be paid to the employee. All right, additional allowance. So here the example is 0.225. All right, and the payroll taxes 0.75, and the fringe benefit is 1.5. This is all the amount that we have to pay to our labor. All right, so the standard direct labor rate per hour here is $15. All right, so you have to bear. This is the per unit. All right, so this is the standard one. So let us look at the quantity. All right, in order for you to produce 1 unit of the product, you get involved with the actual production time quantity. To produce 1 unit, you need 1.5 hours. All right. Rest periods and cleanup to consider about 0.2 hours. Set downtime is 0.3. All this is backed by the company. All right. And we consider 2.0 hours or 2 hours for each unit. You need labor hours, 2 labor hours, right? 2 hours, all right, for you to produce 1 unit. So now actually you can calculate the standard direct labor cost, where in order for you to prepare just now, for 1 hour is $15. So for each unit, you need 2 hours. All right. So it means that 15 times 2 hours. The calculation is very simple actually. The problem in standard costing here, you may get wrong because you wrongly identified which is the standard and which is the actual. That's all. If you can identify which is which, then you will score this chapter actually. All right. So don't worry too much. The main thing that you have to what you call familiar yourself is about the standard and the actual. All right. This is all how we calculate the standard material and the standard labor. So now we look at the manufacturing overhead. Right? So for manufacturing overhead, in order for you to calculate the manufacturing overhead, all right, normally most companies use a standard predetermined overhead rate, all right, and this rate is determined by estimating the total overhead cost for the year, and then you divide that amount by the estimated number of units that will be produced. All right. So this is actually the predetermined rate is then applied to each unit of production in order to allocate the overhead costs fairly and accurately. All right. So this will help the company to set a standard and overhead costs. All right. So you look at the image there, how you want to calculate the total overhead, you divide into the amount that you expect to be produced. All right, so you will get the predetermined rate for each unit, and then you times the number of units that you produce in that particular. So let us look here how we calculate the manufacturing overhead. Let's say the company expect to produce 13,200 gallons during the year at normal capacity. All right, it takes 2 direct labor hours. All right, as we mentioned earlier, let's say we need to produce 1 gallon, we need 2 hours. All right, 2 hours. 2 hours here is labor hours. All right, so we have to set our mind here because only material, the price of material, price for labor. Okay, so hours and also the quantity. All right, the rest it will be manufacturing. Right, so we look here the budgeted overhead cost. Let's see the amount of variable is 79,200. All right. We divide into standard labor hours. Okay, 13,000 times 2 is 26,400. Right, where I derive the standard labor hours, it is from 13,000 times 2. I didn't bring my pen, so I cannot highlight. Hopefully, you aware about right, so 13, sorry, 13, okay, and 2, okay. So we represent this. Okay. So how you derive 26,400? 13,200 times 2 hours. So you get 26,400 hours. All right. So your variable cost is 79,200. You divide it into 26,400. So that's why you derive to RM $3 per hours. And the fixed overhead cost, where do I get this? This information should be available in the question, all right, or given to you. Okay, fixed 52,800 divided into 26,400. So the fixed cost is about USD $2. All right. So in total, the overhead rate per direct labor hours is $5, right? I think the manufacturing overhead are supposed to be tested or teach in the lower part, right? So maybe your previous cost accounting paper, all right? So you have learned about the overhead, all right? So now we proceed to total standard cost per unit, right? So we look here, we have calculated the direct material, direct labor, the manufacturing overhead, the standard price. Okay. So the total standard cost per unit is the sum of standard cost of direct material, direct labor, and manufacturing overhead. So we look at the standard price. Direct material, the standard price is $3. Direct labor is $15 and manufacturing is $5. We just calculated it just now. All right, all these figures is obtained from the previous calculation. All right, and the standard quantity. Standard quantity is mentioned the previous calculation. The direct material we need 4 pounds for standard quantity, and we times $3, we have the standard cost of 12 ringgit, $12, all right? And direct labor is for 2 hours times 15. Now you have $30, and manufacturing overhead is 2 hours times $5. It is $10. So the total standard cost per gallon is $52. All right. So before we proceed with the example or a simple calculation in the next slide, is there any question?
Okay, any questions, class? To Dr. Hannah? Okay, are you sure no questions until this topic? Okay, maybe later, ma'am.
Okay. So in that case, let us try to proceed with the example. So now you can see the standard cost calculation here. Let's see, this is example one. Before we try to answer another set of questions, so let us look at the first example on the standard cost now. Prudent Incorporation accumulated the following standard cost data concerning product CTY 31. The material per unit, 1.5 pound at $4 per pound. And labor per unit is 0.25 hours at $13 per hour. All right. And manufacturing overhead predetermined rate is 120% of direct labor cost. So based on this information, there is slightly different from the previous example where it's mentioned here that the manufacturing overhead, it is a predetermined rate, 120% of direct labor cost. So what you need to do later, before you want to calculate the manufacturing cost, okay, you have to consider your cost of direct labor, right? So you need to identify the right direct labor cost first. Okay, let us calculate here. Is direct material 1.5 pound. To produce 1 unit, all right? To produce 1 unit, you need 1.5 pound and the price is $4. So 1.5 times 4 is equal to $6. Direct labors, you only need about 15 minutes, all right, to complete the job, to prepare 1 unit. So 0.25 hours times $13 is going to cost you is about 3.25. And the manufacturing overhead is 120% of direct labor cost. Okay, so 1.2 times 3.25, you will get into 3.9. All right. Again, hopefully you are clear. 1.2 or 120% times 3.25. Why I use this method? It is because mentioned in the case. All right. When it comes to the manufacturing overhead, there are a few style of question that they will test you. Okay, it's not necessarily just like before or like this. All right, I think teaching lecturer will give you more example on the manufacturing overhead. Look at the question. Okay, you have few methods to identify the manufacturing overhead. All right, so here you use 1.2 times 3.25, so you derive to 3.9. Okay, so all and all actually is 13.15. All right, this is standard costing, right? The standard costing. So I will proceed with another learning objective. Hopefully you can follow me. All right, so whatever that we have learned, this is learning objective 1, where we try to set the standard cost. Okay, and now we will go to the variances, right? So let us look at the second learning objective to determine the direct material variances, right? So variances actually are the discrepancies that arise when the total actual cost of a project or process differ from the total standard costs that were anticipated, that you have calculated just now, right? So the difference between the actual cost and also the standard cost. So we call it variance, all right? We call it variance. So when the actual costs are less than the standard cost, then we can see that is a favorable variances. Why it is favorable? Favorable, the actual cost is lesser than standard. You have set 15 ringgit. Suddenly, the actual cost is only 10 ringgit. So you like it or not? Of course, we like the situation. Just imagine like that. It is a favor to us. All right. So whatever actual lesser than standard, it should be favorable variances. All right. Because the cost is not exceed the standard. The actual cost is lesser than the standard. However, if the actual cost is higher than the standard cost, then the situation is actually, we refer to the unfavorable variances and variance. You know why? Because the actual cost, if you incurred 15, you set at 10, you have to pay more. So therefore, we think that it is not good situation. We don't like it. All right. So you consider it unfavorable variance. All right. So in order to better understand the reason behind the variances, okay, there is a reason behind the variances, right? So it is actually important for you to analyze if you get in charge of this. So you have to inform the company. Of course, the boss will ask you, why suddenly you set at 10 ringgit and suddenly the cost is actually 15 ringgit? What happened? All right, so the boss will ask you. Okay, boss will feel happy if the actual cost lesser than standard cost. All right. So that is normal. Okay. So if you have incurred more actual costs, you'll be questioned more. All right. So you have to what we can see here, be more analytical in your setting the standard cost. All right. So let us look at another question here. Anybody? Variant is favorable if the actual cost. Anyone?
B, ma'am.
Less than
B,
standard
ma'am.
cost.
Less than
B.
standard cost.
All right. It's less than standard cost. Good. All right. So hopefully you are clear. All right. Not because of you have the answer. All right. So you really know that it is favorable when the actual is lesser than the standard cost. Okay. So now let us look how we want to analyze and report the variance. Okay. Assume that in producing 1,000 gallon of Zonic tonic in the month of June, Zonic incurred the cost to the right. Okay, so let's say we look here, the direct material that we uh, have is 13,020, direct labor 31,000, variable overhead 6,500, and a fixed overhead is 4,004. The total actual cost is 55,000. The total standard cost of Zonic tonic is 52,000. Why it is 52,000 standard cost? Okay, it is given to you in the previous example here. The total cost just now, where is the, let me see, here. All right, this is the standard price, okay, the standard cost. And now we have that figure, okay, and now this is the standard cost. Okay, this is the standard cost. 52,000. I don't know why I cannot write, I cannot touch. You can see here, last standard cost is 52,000. The actual cost here is 50. Okay, after you have calculated the actual cost involved in your production, you purchase the direct material, you pay 13,000, direct labor 31,000 and so on. So you derive to the actual cost of 52 and you compare to your standard cost is only 52. So you have a 3,000 different. The variant is 3,000. All right. Whether it is favorable or favorable, you have to. But here we can see that it's actually unfavorable. Okay, the actual cost is more than the standard cost. It is unfavorable. However, we have to analyze by using the following. Right. Let us look at the example here. Okay, direct material variances. You have to memorize all the formula here and your teaching lecturer will highlight to you the most important calculation, and if you can identify the actual quantity, the actual price, the standard quantity and the standard price, you're not going to get a wrong answer. All right, so in completing, let us look at the example here. In completing the order for 1,000 gallons of Zonic tonic, okay, Zonic used 4,000 pounds of direct material, 4,200 pounds of direct material. These were purchased at the cost of 310. Okay, standard price is 3 ringgit. All right. Which one is the actual material? and which is the actual cost, and this is the standard price. Okay. So the formula here, the actual quantity times actual price. Okay. So where do you get this actual quantity? This is your actual quantity. Just a minute, I cannot.
Okay, which one? You should identify first, which is the standard price. Okay, standard quantity, which one? Okay, you can go back to the slide. Yeah, you can see there that for 1,000 gallon, we use 4 pounds, so it means 1,000 times 4 pounds, so it becomes 4,000. Yeah. Okay, and the standard price you can see on the back again. Yeah, it's $3.
All right, class, you will look at the formula. All right, the actual quantity here. I think there's something wrong with my highlighter. Just a minute, try to escape this guy. So so all right, can you look at this? Okay, it is 4,002. The actual quantity, it is 4,200. All right, so you put it here for the actual quantity, 4,200. And then the actual price that you purchase, you incur 310. All right, so you times 310. So that's why you derive to 13,020. And you have to minus the standard quantity times standard price. Okay, look here, actual quantity times actual price and standard quantity times standard price. This is in order for you to derive to the total material variance. All right. Okay, so the standard quantity is 4,000. Okay, where you get the standard quantity from the previous example or calculation just now from the previous slide. All right, and times 3. 3 is the standard price that you have. Okay, that is $3. So 4 times 3 is 12,000. So we can see that 13,000 minus 12,000, it is 1,020 unfavorable. Okay, this is where the total material variance. So normally we will do this first. All right, analyzing the direct material variances. Okay, so you will look at the direct material variances here. The formula that you have to remember is the actual price times actual quantity It doesn't matter if you want to start with the actual quantity or actual price, okay? But maybe you can be constant because you have to memorize the formula. All right, so now the actual quantity times actual price, and another one is actual quantity times standard price. This is your MPV, material price variance. So what you can do, okay, 4,002 times 310 and 4,002 times 3, which is more easier. All right, so this is material price variance. So it is going to give you 420 unfavorable. Okay, so hopefully you can familiar yourself with the material price variance. Okay, and the direct material quantity variance. So actual quantity times standard price and minus standard quantity times standard price. Okay, you have to familiar yourself here. The formula is AQ times SP and SQ times SP. So what we can compute here is 4,002 times 3 and 4,000 times 3. Okay, hopefully you can identify the difference and be standard on that so you won't get wrong. So 600 unfavorable. And in order for you to get that, the first slide just now, 420 plus 600, you derive to the total material of 1020 unfavorable. So let us look at this. This 1020 here. Okay, so this is total material. So by right, normally in the final exam, in our organization or our university, we will test you on the direct material variances and also the direct quantity and also the standard and also the actual. Okay, so this is more important because you can plus these two to derive to the total material variance. Okay, hopefully you can have a good understanding on that, and I will proceed on labor. All right, which is the graph how to represent the total variance just now. All right, you may look through that is actually to simplify the formula, right? And now we look at the causes. Causes of is what we call causes of material variances. Why we face the variances in the material. Okay, it is actually a crucial aspect of any production process. Okay, refer to the difference between actual paid for raw material and the standard price that established by your company. Okay, so the actual that we pay and the price that we have set. Okay, so we maybe face a few factors that affect the price paid for raw material, maybe due to the availability of quantity and the cash discount, all right, or quality of material requested and the delivery method, all right. So maybe when you purchase the raw material, you need to consider the purchasing department. The purchasing department must consider a few factors to set an appropriate price standard. All right. So, for instance, if company can achieve quantity discount by purchasing raw material in bulk, and as I mentioned earlier, this can lower the price paid for per unit that you need to pay. All right. Similarly, if the supplier can offer you cash discount, then the purchasing department can capitalize on that. All right. On that cash discount to reduce the overall cost of the raw material. And maybe because of the quality of the material that you request also is one of the factors. The higher quality may cost you more, right? So, but they can also lead to a superior final product, which actually premium product can be charged higher than the normal product. It is up to the company to set that, and therefore the purchasing department actually must weigh all the cost of the material against the potential benefits, all right, in using the higher quality of the raw material. Another thing maybe the delivery method. Okay, delivery method, you can see here, delivery method, the transportation charges, for example, all right. If you want to, normally if you make an order, you will receive the product maybe 1 week or 2 weeks later, all right. So if you want to expedite the delivery time, and this will increase the overall cost of the raw material. But sometimes if you have a better what we call order from some one of the company that you always deal, so you try to fulfill them, you got no choice, you have to maintain your relationship and so on. So you need to fulfill the requirement of your close or your regular purchaser. All right. So that's why sometimes you have to what we call need to expedite the time to get the raw material. It's happened in the real situation. Okay, not all the time. We can see that you can maintain the situation. Okay, all right. So that is everything due to the demand. But if the reason is logic, so the boss can accept your reason, I think. All right. So the lead time of the raw material is very important for you to take into the consideration. Sometimes you get the raw material for somewhere, if you have to import and so on, so you have to consider that. So that's actually uh, uh, causes to your material variances. All right. Okay. So that is the reason, okay, or causes. Okay. And the material quantity, all right, is a measure of difference between actual amount of raw material used in production and the amount that raw material should be used. eh? When used and should be used. All right. So let's say you have a lot of inexperienced workers. Inexperienced workers normally will give problem production because they are still new, they are not skilled enough in order for them to produce, especially on the difficult product. All right, so this will let the variance in the material used in the production. All right, there are sometimes we have the carelessness in the production. All right, faulty machinery as well. Okay, might lead to the an inefficient production. Okay, sometimes it's spoil and so on. So this is maybe a mistake by the person in charge to handle the machine, for example. Okay, so they don't do the maintenance. Okay, they don't service the machine and so on. So this might lead to the problem, or maybe you have to what we call break from the production, stop the production. You cannot produce up to the normal standard of capacity of the machine, 80%. All right, just because of the machine is not being serviced for few months, for example. Okay, so you have to do something on that, okay, to ensure that no mistake or no what we call huge uh, these what called product that cannot be used in the production. All right. So as a manager or the production manager, you need to monitor and control the use of raw material to maintain the quality, right? So of the final product. Okay. So that's why sometimes in the factory they employ the skilled workers just because they want to reduce the number of faulty product. All right, so that is a causes of one of the causes of material differences. All right, so now we try to do another example here. The standard cost of wonder workers include 2 units of direct material. This is standard cost, okay, RM or $8 per unit. During July, the company buy 22,000. This is the actual direct material. at 750. This is the actual cost and uses those material to produce 10,000 units. Compute the total price and quantity variance for material. So the standard quantity is 10,000. You use 2 for each of the unit. Where I got the information, where I get the information is here. Okay, it is mentioned here. Include 2 units of direct material. Okay, so now the standard quantity is 20,000. All right. So we calculate total material variance. Okay, we buy 22,000 times 750. This is the actual cost. This is the actual price minus the the standard quantity times standard price. This is the total variance. Okay, this is the total, which is the actual times actual, standard times standard. All right, so you have 5,000 unfavorable. And the material price variance, okay, the actual times actual price minus actual times standard price. Okay, so material price is 11,000 favorable. And we look at the material quantity variance, it's 22,000. It is actually the actual unit times standard price and minus standard quantity times standard price, which is 16,000 unfavorable. Okay, so if you look at the 16 minus 11, you still have unfavorable of 5,000, okay, which is represent in total material variances. Okay, so that's why you can calculate the material price variances and material quantity variances, then you can come up with the total material variances. Okay, so that is about the material. And now we look at the learning objective 3, which is determine the direct labor and manufacturing overhead. Miss Rita, do you think that we need to take a few minutes break, or can we continue with the learning objective 3?
So it's up to the class. Okay, so how is it? My class, is it okay to continue or you want to take some break first? Mhm. Any response, please? So do you think you can continue or you need some break? 5 minutes? Okay, maybe 5 minutes or 10 minutes, ma'am.
Okay, all right.
Okay,
Now it's 11:15. Come back
okay,
maybe about do you think 11:25?
okay, it's okay.
All right.
Okay, thank you, ma'am. Okay, class, I think it's enough for your break. Dr. Hannah will continue the explanations about standard costing. Please turn on your camera again and listen to Dr. Hannah carefully, okay?
All right, let us continue on another part of our learning objective today. It is about determine the direct labor and manufacturing overhead variances. Okay, so uh, in completing the Zonic Tony order, Zonic incurred 2,100 direct labor hours. All right, at an hourly rate of $14.8. All right, so the standard hours allowed for the unit produced is 2,000, where it is 1,000 times 2 hours. This is the previous information. You may refer to your previous slide. All right, and the standard labor rate is $15 per hours. Okay, so now we calculate the total labor variance is computed as follows. All right, so the actual hours time actual rate. Okay, the actual hours is 2,100 given in the example times 14.8. All right, and it is derived to 31,080, and your standard hours times standard rate is 30,000 or 2,000 times 15. Okay, your standard hours is 2,000 and your standard rate is 15, so derived to 30,000. So here we can see that the actual is higher than the standard, which is about 1080. It is unfavorable because the actual is higher than our standard. So now let us calculate one by one. It is the same direct labor, only actual hours. Okay, if the actual quantity, then we take the actual quantity, right? Okay, this is when come to direct labor, then we have to use actual hours, actual rate. Okay, the actual hours here is 2001 and the actual rate is 14.8. All right, and the actual hours 2.1 times 15 because we take the $15. That is the standard rate given in the previous information. So 31,080 minus 31,500, you are going to have unfavorable of, sorry, favorable of 420. Okay, so that is the labor variance, labor price variance. Now we look at the labor quantity variant or labor hours variant. Okay, we calculate the actual hours 2,100 times the standard rate is $15 and minus standard hours 2,000 times 15 is 30,000. So the unfavorable figure is 1,005. Okay, so if you look at this information, labor price variance is 420 favorable. However, the labor quantity variance is unfavorable of 1,500. Therefore, lead you to have an unfavorable of 1080 of direct labor variance. Okay, you have to concern about the actual hours and the actual rate and standard rate, standard hours. All right, and the formula is being set up for you. You need to memorize the formula. Right, so now this is the analyzing and reporting, how we derive to the total variance actually. Okay, so you have to memorize a simple formula. Actually, you don't have to you don't have to memorize all these things, right? You need to know the material, the price variance and the quantity variance. All right, okay, so and then you will derive to the total variance. All right, the causes of labor variance. Why there are few variances in the labor. All right, so it's actually uh, it's a common issue. Huh? pays by the business and organization that employ workers. All right, we have few type of employee or workers or part-timers. All right, and this variant actually results from the few factors. Okay, so what we can discuss here is actually maybe you pay workers at different wages than expected and misallocating workers. All right, so when it comes to wage discrepancies, it is important to note actually that the manager or supervisor who authorized the wage increase is responsible for any resulting increase in labor cost. Okay, you pay simply pay maybe the employee or the labor is your friend or maybe your relative, all right, so you give slightly higher or you give more allowance or you increase their rate, okay, because you favor them, then you have to take responsibility or take the responsible, okay, for that particular increase in the labor cost, okay. And this is actually sometimes we have a union and so on, all right, so we have to follow the collective bargaining agreement, all right, in place for us to have a smooth operation. All right, we have to win-win situation for them to have what we call agreement, okay, to agree at certain limit, like what happened now in Malaysia. We can see that they are requesting about minimum pay of 1,800. All right, and I'm not so sure about in Indonesia, but they are still discussing, and certain company have said that is the minimum pay for the workers. Okay, so the increase in the pay will lead to the increase in your labor cost, and this actually will lead to the higher production costs and with the higher selling price. Okay, we know this because we do the uh, costing, all right, and it's going to affect us again, all right. So we got no choice, okay. So we have the company have to bear on that, and they have to be more. That's why you can see now they trying to reduce the employee or the workers in the organization, and they ask you to work more hours, right? So this is actually where maybe pay different due to the different wages lah. And misallocation of workers, okay, this actually occur when workers are not assigned to the most suitable tasks, right, where are not being utilized to their full potential because you are not an expert on that area, but suddenly you have to do that. So that's why it's going to result the company actually a loss, all right. So because we incur more, and this will lead to a decrease in profit and overall efficiency. All right, and to mitigate all the what we call labor price variance, maybe the managers and supervisors, okay, you have the supervisors normally in the factory, have to monitor and control the levels. Okay, where including wages and hours work, because in Malaysia now, for example, government did not allow you to do overtime, especially on the lower level management people. Normally they have overtime, but now they don't allow any overtime just because they want to minimize the cost. All right, and this can involve implementing effective. How you can do implement the effective schedule and tracking system. Okay, as well as providing ongoing training and development to what we call improve your employees, to improve the workers' skill. Okay, and this is uh, going to give a company a good return because they can use their full potential. All right. And I think with this regular performance evaluation also can help to identify and address any areas of inefficiency or underutilization. All right. So that's why when you work in the factory later, okay, to be cost accountant or production manager as well. Okay, so that's why sometimes people don't like you, the workers don't like you. You have to bear in mind because we need to do all this. Okay, we have to be what we call a bit a detailed person, okay, and we keep reminding our employee, okay, try to minimize the cost. They feel not happy. Then most of the accounting people normally will face all these things, all right? Even if you are in the factory, even if you in the audit firm, okay, if you work with any organization at the bank and so on, you will face all this because people actually will look not to discourage you from continue this course, but this is the thing that we have to face. All right, people actually will look at us like a very calculative person. Actually, we do that not because of the benefit that we will get. Okay, that just because we work on behalf of the company. Okay, we have to take care about the company money. Right, we are the one is going to be asked during the meeting. Right, how much money that we have spent, how much money that we still have in the bank. Okay, the balance. Okay, and so on. So the money is very important, and everything when come to money, the accounting person will be absent. All right. Okay. So sometime other department know how to spend the money. We have to control them. Right. They only request this and that. Okay. And we control them. Okay. So that's why some people they don't like accounting department or finance department. Okay. That is in the real life. All right, you may talk that more with your teaching lecturers. That is really true. Okay, now we come to the labor quantity variances, which is actually relates to the difference between the actual numbers of labor hours that you use in the production and the standard numbers of labor hours that should be used. Okay, and this variant is an important measure of efficiency of workers. All right, and this helps the company to assess their performance before you confirm them. For example, okay, so you maybe use this as your benchmark. Okay, in order for you to what we call confirmed employee and so on. Okay, so maybe you can look at the performance or the efficiency of the workers. All right, and sometimes company give bonus based on your production. All right, your pay based on production, number of unit that you produce. Okay, but there is what we call uh, uh, disadvantage to this because employee paid by numbers of production will tend to less concern of the quality of the production because they try to reach at as high as they can in order for them to get more pay. All right, so that is another part that you have to think when you want to have a if you want to pay your employee based on the production. All right. So now we look at these manufacturing overhead variances. Okay, the total variance is the difference between actual overhead costs and overhead costs applied to work done. Okay, it is actually a critical method. Okay, to use to evaluate this performance of a business organization. All right. It's computed by taking the difference between actual overhead costs incurred by the organization during a given period and the overhead costs that were originally allocated, right, or applied to the work done during that same period. Okay, so to compute the actual overhead costs, both variable and fixed overheads are taken into account, right? And these variable overhead costs actually are those expenses that fluctuate, all right, depending on the level of production activity as we learned earlier, all right? This is going to be the same like variable cost of raw material, okay, labor, that is a variable cost, okay, and the variable overhead also are those expenses that fluctuate, okay, and The fixed one is are the expenses that remain constant. All right. At the beginning of the uh, lecture, I think last week. Okay, it is about the fixed overhead costs. On the other hand, expenses that remain constant. For example, the rent, insurance, depreciation charges, and so on. And the total variance is component business where they can identify the area where they are over or underspending on overhead costs and make necessary uh, adjustment to improve their financial performance. Okay, that is where when you total up the actual overhead, you compare with the predetermined overhead from the previous one, then you can look at the discrepancies there, or we call it variance. Okay, so that is the how you report the variance. And here the calculation shows that the variable overhead is 6,005 and your fixed overhead is 4,004 and the total actual overhead is 10,900 and the predetermined is the standard one. Okay, so is $5 for each unit. So let us look at the calculation here, how we derive to this total overhead variance. So the actual overhead is 10,900, which is 6,005. Okay, here from here, right? So 6,005 plus 4,004 minus overhead applied. This is actually unit 2,000 hours times the $5, which is 10,000 dollar. So 10,900 minus 10, you derive to the $900 of unfavorable total variable overhead. Where do I get these standard hours? This is hours that should have been worked for the unit produced in the previous calculation. You can see these 2,000 hours. All right, that is the standard hours. Okay, so now actually, if you analyze and report the variance, okay, this actually involved into two components, right? The price variance and quantity variance. The overhead control variance, which is the price variance, takes into account whether the overhead costs are being effectively controlled or not. And this variant help actually to identify whether the actual rate of overhead cost is higher or lower than the budgeted rate. Okay, and on the other hand, this overhead volume variance, which is the quantity variance, okay, determine whether fixed costs were under or over applied during the year. Okay, and this variant is actually calculated by comparing the actual activity level and the budgeted activity level, right? Okay, so that is how you analyze the variance of overhead and the causes of differences. All right, why there is a variance in manufacturing overhead. Okay, so there are several areas you can look at, okay, that actually can cause inefficiency and ultimately actually lead to a decline in your business performance. One of the area that you can look at is overhead spending. Where overhead spending where over or underspending on items such as indirect labor, electricity, maintenance costs, and other indirect expenses can impact the bottom line, right? So another area, for example, is machine maintenance, where these poor maintenance practices can lead, as I mentioned earlier, can lead to the equipment breakdown. Okay, maybe uh, this will increase the downtime. Okay, they will cost you a lot actually. All right, so downtime, even you are not producing anything, this is considered a cost to the business. All right, okay, and Another thing is the flow of materials through the production process is another area that can impede due to a lack of skill labor to perform the necessary production tasks. And this is maybe because due to the lack of planning and not having enough resources to meet the demand. All right. So when production is slowed down, so maybe can cause a ripple effect throughout the business. Okay, and leading to further inefficiency. And of course, it's going to lead to a delay in meeting your customers' order. All right, and if you look at the lack of sales order, okay, without sales order, there is no demand for the product, so which can lead to excess inventory, and ultimately it's going to be a decrease in profitability. So manufacturers, let's say you manufacture something, all right, you need to have a solid sales and good marketing strategy in place to generate good demand for your product. You have to ensure your sales department or your marketing department are meeting the customer's need. All right. So your product is actually saleable in the market. If you try to produce a product that cannot be sold, then there's no point for you to produce that product. Okay. So you have to test the market as well, or look at whatever product that actually have uh, a good demand in the market. All right. So maybe you will learn your marketing paper, or you might have this what you call innovation paper, strategic management paper, and so on. That where you are going to look at all these things, right? So that's a few reasons or causes of manufacturing overhead variances. And we try to look at the labor and manufacturing overhead here, uh, how to calculate the variances. All right, so the example here, standard cost of product, YY include 3 hours of direct labor at $12 per hour. All right, and the predetermined overhead rate is 20 per direct labor hours. During July, the company incurred 3,500 hours of direct labor and at average rate of $12 40 cent and 71,300 of manufacturing overhead cost. So it produced 1,002 units. Compute the total price and quantity price for labor. So compute the total overhead. So let us try to calculate the total labor variance. Okay, the 3,005 is the actual hours into times 1240. That is the actual rate. Okay, and the standard hours is 3,002, 3,006, okay, and times 12 ringgit, $12. So it's going to be 200 unfavorable. So let us look at the labor price variant, 3,005 times 1240 and 3,005 times 12. So you get unfavorable of 1,004. And if labor quantity here is 3,005 times 12 and 3,006 times 12, it is 1,002 favorable. And in total, variant overhead, 71,300 minus 72 because of 3,600 times $20. So you derive to 72,000. Therefore, it's going to be 700 favorable, right? Because the actual is lesser than the standard. All right. So that is how you calculate, and of course you cannot, I think, memorize all the formula now. So when you do or you practice the question, then you will think that this chapter is slightly easier from the previous one. All right, so don't worry about that, and just a matter of trying to get yourself understand which is the standard and which one is the actual cost or actual hours or actual quantity. Right. We proceed with the final, I think, learning objective here, how you prepare the variance report and from whatever calculation that we have done earlier, and we look a little bit on the balance scorecard. Okay, so balance scorecard is actually something that used by the company. All right, so we look first at the reporting variance. So when it comes to variance, it is actually important to report them to appropriate level of management, right, as soon as possible. Okay, so why? Because the variance report can be very can give impact to the management or the performance of the business, right? So you have to also keep in mind the principle of what we call management by perception, which actually means that the management should focus on significant variances rather than every single one, right? So whatever significant figures, all right, whether it is unfavorable or favorable, once the management look that is very significant, then they will consider that more compared to the rest. All right. So typically, I think the top management responsible to review and analyze the significant variance to ensure that the company is on the right track and meeting is the company objective. Of course, the company objective is to maximize the shareholder wealth and to get this what we call as much profit as they can. All right. This is where you can see the company exist in the future. All right, so we can see that is actually how this help to the company to sustain in the long run, right? So that is little bit on the variance report, how this is important to the organization. So now let us look at the reporting the variance. We have the material price variance report with the material of zonic tonic order listed first. All right, so we look here, this is the purchasing department and type of material that we purchase, the quantity that we purchase, the actual price, the standard price, and the price variance. All right, and this is a total variance. Okay, the format is it is up to the organization. All right, and it's up how you want to present it to be X or Y. It is just up to you. All right, it depends on your what we call organization. And this is how we prepare the income statement based on the result that we get from the previous calculation. All right. So this is the sale revenue, the standard cost 52,000 that we estimate before. All right. And thus gross profit at standard figures is 18,000 and the variances here. Okay, unfavorable, unfavorable, favorable, plus minus all these things, then you total variable, total variance unfavorable is the $3,000. So 18 minus 3,000, you have gross profit of 15,000, and you maybe incur selling and administrative expenses around 3,000. So your net income is 12,000. All right. So whatever figure that transfer from the previous calculation should be considered. All right. As long as you know that it comes from the previous calculation should be transferred here. All right. And that is the net income that you derive from your statement. All right. So let us try to answer this question. Which of the following is incorrect about variance report? Facilitate management by exception. They should only be sent to top level. Should be prepared as soon as possible. They may vary in form, content, and frequency among the companies. All right. The answer should be B. Shouldn't be sent only to the top level of management. All right. So the lower level, I mean the medium level also need to know about the report because they need to improve themselves. Right. So now little bit on the balance scorecard. Balance scorecard is very good, but it's quite costly and not all the company use balance scorecard. All right, and it's going to incur you more cost when you want to set the balance scorecard at the first place, at the beginning of the introduction of the balance scorecard technique. All right, because you need to record everything, but it is good. But normally nowadays we use system, so you know that when we want to develop system, it costs you a lot. Okay, the consultant will charge you very what we call, it depends on the organization. When you look at the company, it's a big company, then start charge you 100,000 sometimes. Okay, so the balance scorecard is actually a strategic management tool, right, that allow business to track and manage their performance against a set of objective. And what we see here, it's incorporate financial and non-financial measures in an integrated system. All right, okay, which actually it links the performance measurement and company strategic goal. All right, so they can identify all the costs and they can measure very detailed and take into consideration non-financial measures. All right, into the system. Okay, and this balanced scorecard evaluate company performance from a series of perspective. All right, so which I think essentially is different viewpoint from that what we capture various aspect of company operations. Okay, and this perspective used to provide comprehensive view of the company performance and help identify the areas of improvement. Okay, so the most commonly employed perspective are the financial perspective, customer perspective, internal business processes perspective, and also the learning and grow perspective, right? So this is the balance scorecard, and let us look at this industry, for example. Okay, the specific industry. Okay, the specific industry measures for example, industry, automobile industry. Okay, they measures the capacity, utilization of plant, average age of key asset, okay, impact of strike, brand loyalty statistic, and that is the things that they measures and they put in their balance scorecard. If a computer system, maybe they will look at this market profile, customers and product numbers of new product, employees, stock ownership, and so on. Right, and if a chemical industry, they will focus on customer satisfaction data, the factors affecting customer product selection, number of patent, trademark, and customer brand awareness. And let's see a bank, they will look at the number of ATMs by state, number of product used by average customers, percentage of customer service score, personnel cost per employee, credit and retention rate. All right, this is the measures. They are going to measures based on this, right? Based on this item. All right. And we look a little bit on the perspective just now, the financial perspective. All right, we categorize that objective into four main perspective. For example, as we mentioned, the financial perspective. Okay, let's say return on asset, which is it is about a measurement of how profitable a company in relation to its total asset. All right, okay, how profit the company make based on the total asset. All right, that is return on asset. All right, when it comes to net income, that is the actually the profit remaining after all expenses that have been paid. All right, and if you look at the credit rating, it is actually credit rating actually is an assessment of a company credit worthiness, right, which can affect its ability to borrow money. Okay, so if you want, if your company want to borrow money from the bank, they will look at the credit rating before they approve the loan, right? And another factors here is about the share prices, the current market price of the company stock. That is the share price. Okay, profit per employee measure how much profit a company generate from each employee. Okay, so that's why I see that the balance scorecard is very detailed. Okay, it even measure how much profit that made by employee. Okay. And if you focus on the customer's perspective, then we will look at this percentage of customers who would recommend the product. This is a measure of customer satisfaction and loyalty. Right? And customer retention, it is the percentage of customers who continue to do business with a company over a period of time. All right, and if you look at response time per customer request, this is actually a measure of how quickly a company responds to customer inquiries. Okay, this is a part of the example that I try to what we call simplify that. All right, and the brand recognition is actually the degree to which customers are familiar with a company brand. And customer service expense, okay, a measure of the cost of providing customer service. Internal process objective percentage of defect-free product. This is actually a measure of the quality of a company product or services. Okay, stock out is a number of time a company is out of stock of a particular product, right? A labor utilization rate. Labor utilization rate, the measure of how efficient a company employees using their time. Okay, this is depend on the skilled workers or unskilled workers. All right, waste reduction, the amount of waste that a company produce, and planning accuracy, the accuracy of company forecast and budget. And final one is the learning and grow objective, where you look at the percentage of employee leaving in less than 1 year. It is the employee turnover. Employee turnover, where if you cannot stay in the company, you think it is a very much pressure, then you leave the company. Sometimes audit firms have very high employee turnover, right? Number of cross-trained employee. That is actually the number of employees who are trained in multiple job function. Cross-train means you have a few type of skill. You can do multiple job function. All right. Ethics violation is the number of times that the employee violate a company code of ethics. The training hours is the number of hours that employees spend in training. All right. Reportable accident. Okay, the number of accidents that are required to be reported to regulatory agencies. So, by setting and tracking this objective, business can improve their performance in all areas of their operation. This is what they do in their balance scorecard. Actually, they record everything. I have an experience during my visit to one of the financial institution in Malaysia. All right, they actually monitor the time out and time in, even if you go to ladies or restroom, right? Because you have to touch your smart card, your staff card when you want to go out. The toilet is outside of the office. Before you enter the office, you have to go to the restroom first. So some people or some employee, they go for their smoking. They take longer time. They chit-chatting outside the office. All right. So this will be counted based on the balance scorecard, based on the time that you leave the office and when you comes into the office. But the employee, when I do my observation, what they did last time, they will call their colleague. All right. So they use the time when the colleague want to go out, then this A person will go in. All right. So they don't record their time. All right. So this is actually related to the employees, what we call working time. Okay. So employee leaving, employee keep go out, and actually it is a cost to the organization. All right. That is the office workers. how about the production workers? Okay, so based on balance scorecard, actually they can what we call analyze more specific, very detailed, and the the reason why the company do not want to practice this is actually a bit costly, right? So we look at a question here. Which of the following would not be an adjective used in the customer perspective on the balanced scorecard approach? All of A, B, C, but not earning per share, right? So, right, in summary, the balanced scorecard is actually that employ both financial and non-financial measures to evaluate and improve a company performance. All right, and it's designed to create linkage between high-level corporate goals and day-to-day operation of the organization. And so these goals actually need to be communicated effectively all the way down to the lower level department. All right, one of the benefit I think of the balance scorecard here is that it provides measures objective, measurable objective for non-financial measures as we can see product quality, customer satisfaction, employee engagement. All right, so this is actually the benefit from the balance scorecard, right? And this will actually enable the organization to track progress and make data-driven decision about how to allocate resources and improve performance. All right. I think that's all for the lecture today, and I think students, I think to listen is quite tiring for you, right? So maybe now I open to any questions if you think that you have something that you ask me or your teaching lecturer, maybe you can have your time now to ask before maybe we take a break and continue with one. I think we is it okay, Miss Vita, if we want to proceed with the tutorial question? Can the student take it? It's already 2 hours. So they can ask me now, and we take a few
Okay.
minutes break and come back for one question, I think.
Okay.
Or you want to handle the tutorial with your student, also
Okay.
fine.
Okay. It's okay. Yeah, it's okay. Okay, class. Any questions for Dr. Hannah related to standard costing? Okay. So please, some questions. I hope there are so many questions from you. No questions? Can you understand about the topic or not? Hmm? Sometimes silence can mean too, yeah, they can really understand about the topic or they don't understand about the topic.
Right. It is true. It is the same thing happen to our student here also. When it comes to online class, we always face this problem. No one is going to ask us a question. Seems like they all very good and understood well. But when we test them, then we will know whether they do
Yeah,
understand
yeah.
or not. Mm.
Okay, no questions, class? Okay. Looks like no questions, ma'am. So I think we can go forward to move to the exercise. Yeah, one questions or one exercise. Please listen carefully, and the rest of exercise we will discuss on next schedule with me. Yeah. Okay.
Okay. So let the student take, I think, about 5-minute break before we proceed, or
Okay,
maybe the
okay, 5
student
minutes.
can try what we call a question one,
Okay, let's
and
try
then
the
I will
questions
share my
one.
answer.
Yeah, let's try
How about
the,
we give them 15 minutes to answer the question, Miss Vita? Can we do that?
okay,
We take
okay,
15,
15
then I'll get
minutes
back
and
to you.
try to do the questions number 1, okay?
Uh-huh.
Okay,
Yeah,
write your
question number
answer
one.
on your notebook, please. Okay?
You can refer to your
Okay.
slide or notes. All right, I think it's quite simple. Answer the total variance, material price variance, material quantity. All the formula is in your
On your
slide.
slide, yeah, you
Right?
can see on
It
your
is a quite
slide.
simple. And at the end, prepare the income statement. I think I give you about 20 minutes. I'll try to come back about 12:30 and see how whether you can complete it or not.
Okay, okay, ma'am.
Okay. All
Okay,
right.
thank you. Oke, silakan dicoba dulu kerjain soal yang nomor 1 ya, ditulis ya. Oke. Okay, class. Can you get the answer for questions number 1? Dr. Hannah, I think you should maximize the scale, ma'am. Yeah. Because it's not a full screen, ma'am. Yeah, like this.
Right. Welcome back. Okay. You managed to settle the questions? I think the question is quite easy. Right. And I've given you the actual and the standard data here. All right. So let us look at the first question. The data first. All right. So we have the cost and production data, the actual and the standard cost. Right. Raw material unit cost. Okay, 225 and 210. Right material, raw material unit use. Okay, so this is quantity. Direct labor payroll, total amount. All right, total amount. But I provide you with direct labor hours work. So you can get the direct labor hours per unit. All right. And we have the manufacturing overhead incurred and manufacturing overhead applied. This applied is the standard figure, right? Under the column of standard column. Okay, budgeted fixed overhead for June. All right, a variable overhead rate per machine hours, a fixed overhead rate per machine hours. And the overhead is applied on the basis of standard machine hours. Okay, 3 hours of machine time are required for each direct labor hours. And the job was sold for 400,000. All right. Selling and administrative expenses were 40,000, assuming that the amount of raw material purchased equal the amount used. All right. And let us compute all the variances, direct material and direct labor. Okay, I have calculated here. Maybe you can check your answer. All right, whatever yellow color is the actual price or actual cost. Okay, so this is for total material variance, which is actual quantity times actual price. So my actual quantity in the question, the actual quantity of raw material that used is 10,600. All right, and times 2.25. So derived to 23,850. And we have to minus with the standard quantity times standard price, which is 10,000 unit, the standard quantity. All right, and the standard price is 210. All right, so we have 21,000. 23,850 minus 21, you have unfavorable of 2,850. That is the total material variance. So let us calculate the material price variance. Okay, material price variance here. Let us look at the actual quantity, 10,600. Actual price, 225. And here, actual quantity times standard price. Okay, one is times actual price. Another one is times standard price. Okay, the quantity is the actual quantity. All right, so 10,000 times 225 and 10,006 times 210. All right. So you will get 1590 unfavorable. Okay. And then we look at the material quantity variance here, which is actual quantity. We take 10,600 times the standard price. Okay, it's 210. So derive to 22260, and then we minus standard quantity is 10,000 times standard price 210, which is total up to 21,000. So 22 minus 21, you will get 1260, right? So 15 plus 12, you will get this figure, right? So hopefully you get the same answer with me. All right. Okay. And we can proceed with total labor variance. You need a calculation for actual rate here and the standard rate. Okay. So let us look for total variance. Actual hours is 14,400. However, your actual rate is not given. So how I derive to the actual rate here is where the 120,000, the direct labor payroll, it means that direct labor, total direct wages for 14,400. So you can look here. All right. The calculation to derive to 840 actually is 120,960 divided into 14,400. Okay, so you get this figure, $8.40. All right, and then how about the standard hours? 15,000 times standard rate. Standard rate also you need to do the same calculation, where 120,000 divided into 15,000 hours work. All right, so you will get the standard rate per hour, which is $8 or 8 ringgit. All right, so now 15 times 8, you derive to 120,000. Okay, so 120,960 minus 120, so it is unfavorable of 960. Okay, so now you can continue your calculation for the labor price variance and labor quantity variant. The trick is only a little bit working that you need to do for the actual rate and the standard rate, because it is not given to you, but you have to identify yourself. Okay, but the information is available. Okay, and that is labor price, okay, and labor quantity variance, also the same method that you have to use. Okay, and you will derive to this figure. All right, 57 and 48, and at the end you will achieve 960 unfavorable figures. All right, because the unfavorable is higher than 5760 minus 480, so you still have 960 unfavorable. All right, if we can identify the actual rate and the standard rate, actual hours and standard hours, and I think you don't have any problem to get all right. Okay, just have to practice it. Actually, you have to try a few questions in order for you to familiar yourself with this standard costing. All right, and we look at the total overhead here and come to the total overhead. You have the actual overhead stated in the question 189,500, and the overhead applied also given in the question, which is 193,500. If it is not given, then you can identify yourself. 45,000 times 3. Where do I get this 45,000? It comes from 15 times 3. All right. Or you may simply take from the standard figures, which is actually manufacturing overhead applied. So 1,898,500 minus 1,935,500, you have favorable of 400. Okay, now the question, section C, prepare an income statement, ignore income taxes. All right, so from your information above, where you need to prepare the income statement, so you can see my income statement here. The sales revenue 400,000, it is derived from the, it can obtain from the information can be obtained from your question. All right, the second paragraph, overhead, apply, and blah blah, and the job was sold for 400,000. Okay, so sales revenue is 400,000, and the cost of goods sold. Okay, how I calculate my cost of goods sold? It is based on the material here. Supposed to be a material 21,000, labor 120,000, overhead apply is 193. All right, so total up to 3,345,500. All right, so and the gross profit at standard, okay, is 65,500. Okay, and then now you have to state your variances. Material price variances, material quantity variances, labor quantity, labor price and labor quantity, and the overhead. So all these derive from your previous calculation, or the previous calculation on top of the answer just now. Okay, so at the end, the total variance is favorable 190. If it is favorable, then you plus with 65500. If it is unfavorable, then you have to minus from the gross profit. All right, so this is the 65,690, your gross profit, and you incurred for 40,000 selling and admin expenses stated in your question, which is 40,000. So 65 minus 40, then your net income would be 25,690, right? So that's all for the answer for the question. And you may try the remaining question. I think you would not have any problem. You may try and you may discuss with your teaching lecturer, Miss Rita. It is, I think, quite simple, and she will explain more better to you, right? You can ask her whatever that you think not familiar with whatever that I have presented to you. Okay? Let me
Okay, thank you, Dr.
share.
Hannah. Okay, any questions,
Yes.
guys, before we close this meeting?
Just a minute. Okay. How to go back to the screen. So actually, we are not really familiar with Zoom, Miss Vita, because we are using Gmeet here,
Oh, okay, okay. But
Google Meet.
Indonesia,
But it's okay.
Google Meet,
It's
yeah.
okay
But
for me.
Indonesia, we more often use Zoom, because
Zoom. Okay.
more familiar Zoom. Okay. So
I cannot.
looks like there's no questions from the students, ma'am. Is it enough for today's meeting?
I couldn't see you. Let me
Okay, wait.
let me close the screen. What happened to the
Okay.
just a minute. Okay, I should stop sharing. Okay. So now I can see you all. All right.
Okay.
So hopefully you have you get something from me today, right? I do understand that not all the time the student can catch up everything during the class, but you need to do your revision. And in order for you to answer the question, why not you test yourself before you go for another class with Miss Vita. All right. So
Okay.
I think we will continue on Friday, right, for another topic, Miss Vita.
Yeah, but I will chat you next ma'am about actually on Friday I have to go to the hospital because I have an appointment with doctor for my son. But if you cannot reschedule, I hope one of my friends, other manager accounting teacher, a lecturer can join with you.
Okay, never mind. We will discuss it later. And
Okay.
we WhatsApp you WhatsApp me. All right. Now hope for the
Okay.
student, please try the question and
Yeah.
enjoy doing it because it's quite easy. All right. Okay. If you don't
It's just
understand,
yeah, it's just mathematical
yeah,
actually, yeah.
it's very much simple compared to the process costing.
Yeah.
Okay, the process costing is very much
It's more
harder compared to
complicated.
this. Yes. So
Okay.
I think that's all for today. Hope you enjoy the class. Even you cannot say anything, I don't allow you much. Okay, and I think at least I can contribute something. Okay, for your studies. All right. Thank you, Miss Vita. See you.
Yes, thank you so much,
All
Dr.
right.
Hannah, for your time. Yeah. I hope guys you can understand our topic, but don't worry, we will continue to discuss about the exercise on the next meeting. Okay, before the next class with Dr. Hannah. Okay, thank you so much, Dr. Hannah, for your time
Thank
today.
you.
See you again in the
All
next
right.
meeting. Okay, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Okay, bye. Thank you, Dr. Hannah. Okay, guys, bye.